You are listening to Charting Wealth's Daily Review for Tuesday, the 6th of December, 2016. Market is sliding sideways. Yes, it was up for the day, 0.63%, but what's really going on with this market is we've got a sideways slide underway. So let's jump right into things. We see that our PPO, that is our price percent oscillator, is actually up. It has actually kinked over, going back up again along with the signal line. The derivative oscillator, however, has actually lost energy as it starts forming this new two-day candle. What do we see? Well, the market pretty much peaked out on the 28th of November and was down over the next two-day candles, the candle ending on the 30th and on the 2nd. And as we see the market redrawing itself, we've got a green up candle for the day. It is an up day, but even at the end of the day, the market hasn't hit the high that it closed at back on the 28th. Or again, remember we use the Heikin Ashi candlesticks. That is just the high that we have closing as you technically look at a candle. They are calculated differently under the Heikin Ashi type candlesticks. Heikin Ashi means average pace in Japanese. We love this kind of candlestick. So much easier to read than the old standard candlesticks. It makes a lot more sense. You want to know what Heikin Ashis are about? We've got the best training on our website for that, and also on our YouTube channel, Heikin, Heiken-Ashi. You can go look up and watch that video. I'm very proud of it. It's an extremely good video that tells you how to read those candlesticks. So we see that the market is moving up again. This is the total market, IYY. Before we get to our other two indexes, you can see that when the market started moving down all the way back on the afternoon of the 28th, the market still hasn't gotten as high as it originally started back then. It topped out on the morning of the 30th, Wednesday, the 30th of November, and then went down, started moving back up. Large move up this morning, that is on Monday morning the 5th, and then basically paralleling that, topping out at about the same spot at the end of the day, still well below actually where the candle started moving up on the morning of the 30th. So we'll continue to just see what's going on, still in a confirmed down move. Now, something important to pay attention to. We see this up day hasn't crossed over going up just yet, but when we look at our daily chart and our weekly chart, we're still in confirmed up moves on both of those charts. So what could happen over the course of the next day or two? We might see a crossover going up on our 4-hour chart. That would be a jumping in point to potentially ride an uptrend. So watch for that. Practice that if indeed it happens. Now, those of you new saying, wait a minute, what's this guy talking about practicing? We're not a stock calling service. We're not telling you what to do with real money. We are an education firm. We want you to practice with us. Learn to read these charts. When you learn to read them and you get good at it, and you can time after time make successful practice trades by opening up an account, a virtual account at any of the online brokers and practicing with us, when you get good at it, then and only then can you make up your own mind with your own money. But we are not giving you advice. We do not give advice. We don't get paid to do that. So please practice with us. Let's continue to look at these markets. We're now going to go to the two-day chart and look at the S&P 500, up 0.57% for the record. Total market up 0.63%. So the S&P 500 up a little less as shown by SPY. It too is sliding sideways. We do see the PPO, the price percent oscillator. That's our main one. It has kinked up, so it's moving up more, although the derivative oscillator is losing energy again on that two-day chart. And the movement that we see up over the course of the day pretty much parallels where things topped out. So we're seeing greater up movement as far as where things are happening on the S&P 500 as per the total market. Let's check out the 4-hour chart. What do we see going on? Lots of up movement in the morning, bit of a pullback in the afternoon. Still negative on the derivative oscillator and haven't crossed over yet on that 4-hour chart. But again, if that happens, might give you an opportunity for an up move to actually to jump in and do a virtual trade going up on SPY. So watch, it may not happen. This may all fall apart. But if it doesn't, then by all means, get ready to jump in, do a practice trade, ride that up, see if you can be successful in it. So lastly, we're going as far as our indexes before we get to gold. We're going to go to the Qs. What is the Qs? That's the NASDAQ 100, the tech stocks. Confirmed down move on this 2-day chart. Confirmed down move on the weekly chart. However, for the record, the Qs was up for the day. And again, we're simply looking at our average pace candlesticks, our Heikin Ashi. We have this drawing as a down candle. Now let's pull back and take a look at the 4-hour chart. Let's see what we see. Well, the 4-hour chart actually has been in a confirmed down move. It is pulling back some, hasn't crossed over yet going up, so we don't have an official pullback. We don't have an official pullback at this point. We'll continue to see if indeed that crosses over going up. If it does, then we'll be in an official pullback and we can look to jump in on a down move. Those of you who really love your Heikin Ashis and gotten good at reading them, if it of course reverts back over to red down candles, you could look at jumping in. That's more risky than our traditional waiting for a pullback and then jumping in at that point. But that is where we are as we look at our 3 indexes. And again, the Qs, that is NASDAQ 100, up 0.79%. The most of the 3 indexes for the day. Now lastly, we'll go back to our 2-day candle. I'm sorry, our 2-day chart, and we will look at gold. What's going on with gold? Gold has a confirmed down move on the weekly and the 2-day chart and has continued to move down. All the derivative oscillators lost some of its energy. Gold down 0.56% for the day on Monday. Now if we take a look at the 4-hour chart, what do we see going on? Well, it's crossed over going up, still in a confirmed up move. Gold has gotten squirrely on us, particularly on our 4-hour chart. That had been such a great chart prior to just the last few days where it has started peaking up and dropping back down, peaking up and dropping back down. If we look back, we can see how good gold was so many times over the last many months, but this is exactly what gold did at the end of the year. Remember last year in 2015 and for the first few weeks of 2016. So this is not unexpected. And again, what does that mean when your chart stops working for you? You stop using it until it works again or till you find a better one. Now again, if gold crosses back over going down, you can always look to get into that. Just do our traditional trade if indeed it rolls over and starts losing more energy, because we are both in a down move on the weekly and the 2-day chart. You can always do the traditional trading that we like to look at, the traditional moves. You can buy an inverse gold fund, again, with your virtual trade. We don't, we're not talking about you going out there and buying a real gold fund. You and only you make those decisions when you really know what you are doing. Folks, that's where we are as we end the day on Monday and go into Tuesday, the 6th of December. Hope that you are looking forward to a wonderful Christmas holiday. Stay with us. Train every day. If you don't already have our How to Read a Stock Chart video, our daily market worksheet, and the layout that we use at Free Stock Chart, from freestockcharts.com, all those things that we use here at Charting Wealth, you need them. How do you get them? You go to chartingwealth.com, you sign up for our newsletter, and you get links to all of those things. If you want to help us out, please do so by going to iTunes, signing up for our podcast, subscribing, giving us a 5-star rating, saying something nice about us. You can also do that on YouTube. You can subscribe. You can also go to our Facebook page. We've got thousands of likes there, and we very much appreciate that. And you can say something nice about us too. You can also find us on Twitter. Thank you so much for being with us. God bless you. Let us hear from you. Let us know what kind of training you need, questions you have. We'll do what we can to help you. It's all about your success in learning how to read these charts. Once you can read them, my friends, you've got the potential to have total financial freedom reading charts. God bless you. Take care from chartingwealth.com.